Welcome to another episode of the Real Estate Baller Show. If you're new here, my name is V Lee. This is the show where I interview upcomers, doers, and ballers of the real estate investing world. The purpose is to help you to reach your financial freedom in real estate investing faster. Today's guest is Rich Drake. Rich has been in the real estate investing, specifically in the single family space, since the beginning of time. So we invited Rich here to share his view on today's market because we all know how crazy it is with all these headlines on newspaper, CNN, Wall Street Journal, and all. So Rich is here to share his view and some of his advice on what to do in real estate investing and how to find the right property management company for your rentals. I know it's a lot, but Rich has so much knowledge and experience. Hey, Rich, welcome to the show.
V. Lee, how are you today? What's going on?
Fantastic. Now that you're here, you're wearing my color, pink.
Well, yeah, I'm making your day. It makes your day anytime I'm around. So there you go.
That's right. Rich, can you give the audience a quick introduction?
Oh, goodness.
Try not to be too impressive, okay?
Oh, well, that's impossible, right? Grew up in small town East Texas, went to the Navy, flew planes for them for about 6 years. As soon as I got out in the mid 90s, started buying houses and flipping them, ended up running into HomeVestors. So we got a HomeVestor franchise in 97. About 1,600 houses later, we're still doing our HomeVestors deal. And about 8 years ago, got into managing properties for third parties. So we manage single family rentals and small multifamily for landlords. And we got about 900 of those that we do now. And that's about it.
Well, I think in Houston, if we stack everyone up together to see who has bought the most houses, I would say you probably up there on the top 5.
You know, I'm pretty good friends with old Eddie Gant. So basically, whenever one of us talks about, gets to bragging about how many houses we've done, the other one just says, well, I've done that plus one. So we make sure we one up each other. So I think Eddie's pretty aggressive right now, still buying. So he's probably passed me up. So I'll let him have the lead there.
That's very gracious.
Yeah, Eddie's the loud one and Rich is the generous
good looking
one.
I'm the pretty one.
You're the pretty one. So, having bought over 1,600 properties, you have a very good knowledge of the single family sector. Maybe give us a quick overview, high level of what you think is going on right now.
That's a great question. And that's something that I think is really in the news lately. How much appreciation we've seen over the last year or two. It's significant appreciation, 15, 20% a year. And everybody's complaining that the houses are too high now. Taxes are going up so much. Everybody's freaking out. And then you see all the stories about the housing bubble, the housing bubble, the housing bubble. Well, don't listen to me because I don't know anything, but it really seems to me that there's not going to be a bubble when there's a true shortage of inventory. I lived through 2008 when the market popped and it was awful. It was poor lending practices. It was a combination of a lot of things that happened. The securitization market really messed with real estate, but you don't see that now. The lending is not crazy. There's still default rates and delinquency rates are very low. The mortgage as a percentage of people's income is still reasonably low. So it's not like houses are outpacing people's incomes. And look at Wall Street, for instance. When you say, hey, here comes the bubble. Well, somebody needs to tell the most smart financial people in the world that, because they're pumping $50 billion into single family right now. And I just got back from a conference in Miami and the entire conference was full of 35-year-old kids in $1,000 suits.
Well, let's assume that Wall Street has never been wrong, right?
Well, there you go, right? But, they're more right than they are wrong typically. And they feel very comfortable with this space. And they're buying as much inventory as they can in chunks of hundreds of millions of dollars all over the country. And we see it as home buyers. We're competing against those guys. right? And now homeowners are competing against them to try to get a house to move into just to live. So, I've talked about, what does Wall Street know that you don't know? Well, they know something because, and I really think it's because there is a true shortage. For instance, the last, 30, 40 years ago, the number of permits pulled for new construction now is the same as 30 or 40 years ago. That's obviously not enough, right? Now, will we see a downturn? Probably. I'll say we'll certainly see a deceleration in this appreciation, right? It's not going to go 20% a year forever. But I think the Sun Belt and Texas in particular is going to really be protected from this because we have people moving here every single day. The ones more at risk are the West Coast and the big cities up north that people are moving away from. At the same time, they're raising rates because the rates are what's concerning everybody. We're going to crash. But I really think there's a true shortage of inventory. After COVID, builders stopped building for over a year. That dug the hole even deeper, for the shortage. So again, I don't know anything, so don't take what I say and bet your life savings on it. But I've been doing this a long time, and I feel strongly that we're not going to have a crash, especially not in Houston.
So I was reading an article this morning, actually, and it was talking about, obviously, the shortage of supplies and home supply. And they were saying, building more isn't just the solutions. It was an interesting article because it's talk about we should share the homes. Because now you have a lot of, one person who occupied a 3-bedroom home, that's taking up a lot of space. Where back in the day, where most people share a roof.
That is true. A lot of people would, their parents would live with them or their children would live with them. And, that still happens today in some degree, but I would agree with you, not nearly as much as it did in the past. And there are some companies that are focusing now on that co-living model where they're renting just one bedroom out for a longer term, but they're just renting out by the bedroom. So that's an interesting model. Micro units are coming out as something that's worth building. There's enough inventory in the $1 million homes. What's really short is affordable stuff, right? Everyone needs a place to live, and the majority of people want something, a few $100,000 or below.
Yeah, there's also some density issues where governments are restricting the density. And so the government's going to have to make decisions on if they're going to allow for adjustments to the density so that people can build more.
Certainly. Yeah. And the dirt's so expensive. Land is very expensive. Construction costs have gone up because of labor costs, materials costs, but development costs have gone through the roof as well because of all the regulations. Like you said, that brings to my mind all the regulations they've added for development, for drainage, flood control. A lot of the things you do for flood control are in excess of the impact you're going to have on your land, but they're making up for the lack of regulation over the last 50 years. And they didn't do anything. The government just let people do whatever they wanted, caused all these problems. And now the people developing now are paying for it.
Yeah. And what's interesting about the cost of new builds is it's high enough that if a market can't handle it from the affordability point, there's just going to be land there that's not being used to build homes. So what's either going to happen is the cost to build is going to have to go down, or the people are going to have to be able to afford it. But there's plenty of places around the country that have the land available. It's just the numbers aren't going to work yet.
Yeah. And it's truly difficult to find labor, skilled labor. You look at D.R. Horton or Meritage Homes, these are two major players in our market, for instance. And if you look at their stock, their PE ratio is like 5 and 6. So it's like there's a very negative connotation to builders because rates have been going up, right? Mm-hmm. But if you read their quarterly reports, they all are saying, as fast as we can build a house, it's sold. We have zero inventory. We have no pricing concerns whatsoever. Every time we raise prices, no one cares. We see rosy future ahead, and they keep reiterating this, and the stocks are still being pressed down because of the fear of interest rates. There's just not enough people building fast enough for the demand.
Totally agree with you.
So back to, I hear story. I hear, I talk to people on the street and I read articles, and there are other funds that think that a crash is coming because of, the stock market, other factors that would affect the housing market. But you strongly think that that is not going to happen.
I really don't. I mean, yeah, the stock market can affect us a little bit. It can give us a negative connotation, overall a negative feeling because it's going down. But most people think the market is going down because there's so much inflation, prices are going up, and therefore rates are being raised to temper the inflation. And therefore rates cause growth companies to have to borrow at a higher rate, and that causes their stocks to get pushed down. And at the same time, higher rates make it more difficult to buy a house in a certain price point. But I saw an interesting graphic the other day that said, if you have demand for 1,000 houses at 3%, and at 4%, you have demand for 800 houses, at 5%, you have demand for 500 houses, it really doesn't matter when there's only 120 houses available.
Yeah.
And that's where I feel we really are standing.
Yep. There's also a difference between when you lift rates and nobody knew they were going to be lifted, and you have anticipated rates, because when they're already anticipated, because the Fed's been pretty vocal about it, the investors are already anticipating that. And so everyone's got a chance to project for it. And that's way different than when the rug is pulled out from underneath your feet and you didn't know what's going to happen.
Yeah, they've been talking about it for months and months and months. And, this whole issue, post-COVID stuff, when they started the lockdowns, I know you were involved in a lot of these conversations with some of the other investors around town, is, okay, how do we thrive in this scenario, right? Because here's things that are going to happen. And so I'll kind of put our heads together and say, all right, as a result of this, what's it going to do to our market? What's it going to do to the credit market? What's it going to do to the housing market, the rental market, the short-term rental market? And we were, I think, way more prepared this time around for rapid change than we were, for instance, when 2008 hit us like a ton of bricks, and I never saw it coming.
Well, the other thing with 2008 is the banks were in play from the lending, and everybody assumed they would keep getting refinanced and the loans would be out there. And that's what stopped everything. Now, we've normally been talking with folks just like Rich here, who are from places that have been growth markets where people are coming into the cities. We haven't really talked to like a Rust Belt area where people are leaving. And it would be interesting at some point to hear their anecdotal feeling about it. Because like you guys are talking about in Houston, where I am in North Carolina, there's such an influx of people.
Mm-hmm.
Well, I know just the people to bring on the next show that they just left California and moved to Texas. So let's tell you something.
Well, here's the weird thing about California. People are leaving as fast as they can, and the market's still going through the roof. It's crazy. As
an individual investor, what are the things that if I'm looking to buy a rental, what do I need to be cautious about? Or, should I still buy rental today? This episode is brought to you by Buzz Vacation Rentals, a premier property management company in Houston and Galveston area. Buzz Vacation Rentals specializes in managing short-term rentals the right way. Give Buzz a call at 281-549-8432 to learn more, or check out their website at buzzvacationrentals.com. That is buzzvacationrentals.com. Now back to the Real Estate Ballers Show.
Yeah, I guess a good question. But what do you look for, and then actually, do you do it at all? That's kind of what you mean,
right?
I'm still buying rentals. Our company's still shopping for rentals. I think the appreciation isn't over, so I think there's still a lot of room for well above average appreciation. Maybe not 20%, but average is 2 or 3%. And with 2 or 3%, we make a fantastic yield. Mm-hmm. But at 6 and 9 and 10%, it's a stupid yield. So one thing I try to explain to investors, if we have a client that's an investor, they don't have a day job, they really are tuned into the markets, they understand this, and they really don't focus on cash flow from their rental. They're focused on long term, right? The yield, the appreciation, right? The building of wealth long term. Well, the people that we deal with that are kind of unintentional landlords, the guy that, they moved out of their house and they decided to keep it as a rental for some reason, they, as soon as their tenants move out lately, they want to sell. Because they see this big payday, right? It's high prices. But I think for the most part, they're being short-sighted because it's going to continue for several more years, maybe 10 years even. Yeah. So I don't know why, I know why, because they see the dollars, right? And sometimes in a specific stage of your life, that's the right decision. But for the most part, it's probably an early out, and I don't believe it's even close to time to sell. So we're buying. You do need to watch out for the higher dollar stuff. I would stay below 300 or 400,000, because once you get into the $600,000 and $700,000 range or more on houses, it's very hard to cash flow at all, right? Because rents, if you got a $200,000 house, rents a couple thousand, 300,000, rents close to 3,000. When you get an 800,000, rent's not 8,000.
Well, that's where you have to consider short-term rentals, right?
And absolutely,
it's scaring me. I just bought a beach house.
That kind of stuff, that's a whole nother ballgame, right?
Yeah.
So yes, that kind of stuff, if you can get something like that at a good value, it's an absolute good idea to do short-term rentals. I was telling somebody the other day, and I probably shouldn't say this where everybody finds out and goes and buys it all, but the short-term rental forums and groups on Facebook, right?
Yep. It's
so easy to go in there and buy a whole house full of furniture for like half price, because what people do is they decide they're going to do Airbnb. They start doing Airbnb, and then they figure out it's a lot of work, and they quit. Yeah. Instead of calling somebody like you, V, and let somebody else handle it that's experienced. They don't want to pay a little bit of money to have the work done. They feel like it's going to be easy. Well, you're in the hospitality world now. You have to respond at 2:00 in the morning. You have to send an AC guy at midnight, and they don't realize that. So there's tons of people that get into Airbnbs and jump right back out, when if they would have just been smart and hired somebody such as yourself, they'd still be in making great money.
I need to
you're welcome.
Replay this over and over again, right? Because often when I talk to people, the biggest challenge is, well, why do I have to pay you a commission? This is exactly why, because we have the expertise and the time, the team to manage all of it.
Well, if you're going to do an Airbnb yourself and you figure out how to get it on whatever, websites you want, you still don't have a process. You still are going to mess up and give someone a bad experience. Even if you read 15 books, you're going to mess stuff up. You're going to give people, they're going to give you bad reviews. And as soon as your reviews go below about 4.5, you're basically invisible. It's hard to rent. It's just a lot of work, a lot more than people think, but it's absolutely a great model to make great cash flow.
Rich, what percentage of your inventory is single family versus anything other than single family?
We're probably 90% single family and about 10% what we call like boutique multifamily, anything below 40 or 50 doors. You don't really put a person on site until you get pushing 70, 80 doors, because it's just not financially feasible. But yeah, we do the small, 8-plex here, a 20 unit over here. It's 80, 90% single family.
Got it.
So questions for you. With interest rate being higher, obviously it put your P&I higher. Would you even consider buying something where it's gonna give you a negative cash flow?
Absolutely. So I know that sounds crazy to say that, but there's a lot of times where you could buy a house that's undervalued. For instance, like Edo, east of downtown, right? If you're on the edge of that, where it's gentrifying right now,
yes, and
that area hasn't seen the increase yet, but it's coming shortly, and you just might have to pay a couple bucks to own it, it's going to appreciate well in excess of that little bit that you're going to have to pay out. Obviously, you have to be financially stable enough to be able to afford to do that. I mean, you look at a growth company on Wall Street that's losing $100 million a year. They're doing that because in 5 years, they'll be making $100 billion a year, right? So it's not like a big concern to maybe negative cash flow a little bit, because you also know this, but rents lag behind appreciation a little bit. So while houses are going through the roof, rents aren't going through the roof right behind them, because a lot of people are locked into 1 or 2 year leases. You have to wait a little while before you can raise the rent. So you can always see, hey, this neighborhood's going up. I can buy this house at a great price. It needs a little work. I'm still getting a bargain on it. I could sell it today and make 60 grand or whatever, flipping it. But if I hold it, I think it's going to go up another 200,000 or 300,000. Then why wouldn't you take a $200 a month loss for a year and then re-rent it for a new market price down the road and then start cash flow?
So what would you say to the investor who said, I'm just going to park my money because the interest rate is high right now and I don't want to buy rental?
Most people know the answer to this, but the very worst thing you can do during inflationary times is be in cash. You need hard assets. In my opinion, the best hard asset is real estate, right? There's a quote out there that 50% of the currency in circulation has been printed in the last, 24 months or whatever they said, some crazy number. So we've increased the money supply so much, trying to inject liquidity into the market and trying to prop up the economy, that now we've created this inflationary period where, look at gas is $4 or $5 a gallon versus $2. Everything is cost more now. So when you say, well, everything costs more, you still a dollar is a dollar. Yes, but the buying power of a dollar is less. Mm-hmm. So that means dollars are going down in value, in relation to everything around. That's why the appreciation on the houses are so high, is because the dollar's becoming less valuable. So therefore, that makes the houses worth more. So you'd be crazy not to put your money into something that's a hard asset that's going to go up in value versus just let it sit there and make 1% in a money market.
This is where Grant Cardone's statement, cash is trash, makes sense, right?
Cash is trash.
Cash is trash.
They say they're saying inflation's around 8 or 9%, but everything I buy feels like it's up 30 or 40 or 50%. Every time we go out to eat, it's not 8% up. I don't know where all the other stuff is that's only 2% to balance.
Well, the government, they take fuel and food out of the equation when they figure out the inflation number. And then they also can randomly just delete a number that they think is an aberration. And so what they do is the ones that make them look bad, they take them out. And that number is not consistently looking at the same data every month and every quarter. It's looking at different data every time, so they can massage the number so they don't look bad. It's really a kind of a scam. A good example, V, of the hard asset conversation. I was in Zimbabwe, and that was when they were having like 1,000% inflation. So, they would have $500 and they would go out into the bush for 2 weeks. If they came back, it's worth $250 in 2 weeks. So what they would do is they would buy cigarettes and coffee and staple foods, rice, grain, and just store it at their house because it's still worth the same amount. It's worth twice as much money when they get back from the bush. That's what you need to do, but do it on a bigger scale, right? I don't recommend going to, stocking up on cigarettes or anything, but real estate, some kind of hard assets.
So are you recommending we should all go to Zimbabwe? Was that the main point?
Yeah, go to Zimbabwe and buy coffee and cigarettes.
Okay, so fast forward. Now I've bought a property and I listened to your advice about not managing it myself. And I need to talk to a property management company about managing my properties. Mm-hmm. Yep. What are the things I should ask?
Well, you need to make sure that the property management company is doing certain things. Are you answering the phone 24/7? How do you handle maintenance? How do you handle delinquencies? Because if they don't have a good answer for that, you want to make sure they have really locked down processes to handle that day in, day out, right? We do a lot of things like we take payments electronically. We allow tenants to go to CVS and pay with cash if they're that type of tenant. Our eviction process is very streamlined. We offer, for instance, what other things do you offer, Mr. Property Manager, that makes my investments safer, right? Well, we have two programs that we recently instituted. One is we do a rent guarantee. So if we have a tenant that has a problem, we've engaged with an insurance company that takes care of this, and it'll pay up to 2 months of lost rent if we have lost rent on that tenant, which is great, right? Mm-hmm. It mitigates your risk. The other option we have is a rent advance. So a lot of investors have a deal on the table they can't buy because they don't have the down payment. Well, you can get up to 1 year rent in advance, and then you don't take any risk on the collection because we're dealing with Wall Street on that, and they've bought that income stream, and they're the ones taking the risk now. You're not. So we do a lot of things like that to make less risk for the owner and help them to build wealth over the long term, because this appreciation is not stopping, and building wealth is the key right now. And you need hard assets again. And I think single family rentals or short-term rentals, apartments would be good, small apartments, all of that would be great. Land, great. Land doesn't make income though. That's the problem, right?
Yeah.
But it does go up in value.
Yeah, I just bought a lot, almost oceanfront, and I can't wait for it to be built.
Well, I was telling somebody you bought a lot on the second row, and you're just waiting until the first row gets taken over by the ocean, then you'll be front row.
Knock on wood. I don't pray for that to happen, but that will be.
That'd be okay.
I think that's going to be another 50 years from now.
Very well, yeah.
So what are some of the do's and don'ts of owning a rental since with your portfolio, you haven't bought over 1,600 houses and managing 900. You probably know all the stories and.
Yeah, I think it starts with tenant selection. A lot of people have tenants fill out an application and they check their credit. You want to not rent to tenants who have outstanding balances on evictions because, with an eviction, you got to be a pretty bad actor to get all the way down the road far enough for someone to file an eviction. Because if you're late, most landlords will work with you and let you do a payment plan so you don't have to get to that point, right? But if a tenant has allowed that to get to an eviction filed, even if it didn't go through, they allowed it to be filed, we don't take that tenant at all. A lot of tenants have, bad history behind them. And what a lot of owners do is they get that background check and they get those rental references and they don't check them. They just take the tenant's word for it that it's good. Well, what good does it do to get a rental reference or a job reference if you don't verify that it's real? They say they make $6,000 a month income. Well, how did you verify that? Well, they have pay stubs. Really? Do you think that printer that they have at home can't make those pay stubs? The fraud, there's online sites now that'll send you pay stubs.
Yeah.
For rentals. So we use a database to avoid that. We use a database that compares their pay stub to the pay stubs of all the major companies. So it looks and goes, this is not the same kind of pay stub this company puts out.
Wow. Is that a big enough issue that, I guess it must be a big enough issue that you have to deal with that, huh?
It's a huge issue. Another thing we do is when they apply for the house, they have to take a picture of their driver's license and then they do a 3D selfie of their face with a 3D photo technology. Everyone has it on their phone. They just don't know it. And it'll tell us that person is not the same person on the driver's license.
Hmm.
Oh, wow.
It's over 10% is fake.
Wow.
Over
Do you
10%.
deal with a lot of Section 8 or voucher or third-party paid
Not
deals?
a whole lot of Section 8, but we do. It's fine. And a lot of people love Section 8. A lot of people hate it. But a lot of times they'll stay for many, many years because they don't want to lose their voucher. So they do their part.
That's right.
I was at a conference, Rich, and this guy, his process of verifying the tenants was very interesting. He actually meet with them at their current rental to see how they
I've
live.
heard of people doing that. How do they live now? And if they want to allow you to go to their house, they're out. Yeah, I've heard of that.
And I thought that was genius because, that's how they're going to take care of your property in the future, right?
Yeah. And now I don't think it's a bad idea for somebody with one or two houses if they're going to do it themselves to do that. At our scale, it's really not practical. We have a large percentage that come from out of state, moving from California or wherever. Yeah. A lot of people moving from their parents' house into their first house, things like that.
Yeah. Or
moving from student housing into this, or already moved out, and you can't be real sure if they're, So it's not practical for us, but it's a really neat idea. And, I heard Mr. Landlord say that a long time ago. Do you remember that guy?
Yeah.
I still have his binders.
Yeah. He's actually, he has a conference this weekend, actually.
Yeah.
Some friends of mine are going to check it out.
Do you think his concept principles still apply in today's market society?
The binder that you and I have, maybe not. Some of it probably still does, but I can't imagine that it's all the same now. I imagine he's got some more updated data, more updated processes for sure. I mean, back when we saw him, it was at a home investors convention where I saw him. The cloud didn't exist, right? So web-based sharing technology was brand new. And you didn't have QuickBooks Online. You didn't have all your CRM online where everyone shares data instantly. So all of those things now have changed most every industry.
What he talked about that really stuck with me was he really emphasized the importance of keeping a high occupancy by how he interacted with the tenants. Mm-hmm. So he minimized the downtime on the transitions and he kept people there. He really was one who got in my head to not underestimate how important it is to keep that place occupied one way or another.
Well, we have a giant banner in our office that says the tenant is the asset. And it really is true. The biggest reason tenants leave a house is frustration over maintenance. Mm-hmm. They'll move over that. So they may not move when it happens, but they don't forget and they move when the renewal comes up. But we do everything we can to treat the tenant like a customer, right? because if you treat them fairly, respectfully, and they like you and they truly understand that you care about them and not just they're a money machine, right? If they keep renewing, and goes for every landlord, if you keep tenants for 20 years, you'll get rich. If you turn over every year, you'll go broke.
Yeah.
So our average tenant stays between 3 and 4 years, which I think is probably above average. It's about 3.5 years.
I still use that offer from Mr. Landlord where if you stay for another 2 years, your rent is going to be this, we'll take this much off.
Right.
And if you sign a month to month, it's going to be this. So basically you persuade them, you position your numbers to where they're going to sign another 2 years or 3 years or so.
Yeah. We do multi-year renewals, especially when, especially when there's such appreciation right now and rents are going up so much. If you'll sign for X number of time, we'll leave the rent at this for the next 2 years. And that's, we tell landlords a rent reduction will almost always make you money.
Yeah.
So if you're trying to get $1,500 and you got somebody today at $1,450, take the $1,450, because if you wait just 2 or 3 weeks to get the $1,500, you're still behind.
Yep.
So are you recommending to people to try to extend their tenants for 2-year leases, or do you like 12-month leases, or what's your position on that?
We normally extend for 12, but I like V's idea, and I don't mind doing more than 1 year extension, and I would still raise the rent, right, from the current rent. But in this market, I think you can justify the raised rent and say, I will lock you into this price for 2 years, because you don't want to leave them at last year's or 2 years ago's rate and just lock them in for 2 more years. They understand. You can say, hey, go out and shop a little bit and call me back. And they will be sticker shocked and they'll come running. I can't tell you how many notices to vacate we get that get rescinded because they go and shop and go, I can't, because we'll raise their rent some small percentage, right? 3, 4, 5%. But it typically don't go all the way up to the market, because if we can offer them a decent value, everyone wins. And they'll come right back and say, oh, we decided to stay. They don't tell us it's because they went and shopped rates, but it is.
Well, even, just a $50 increase, that's a $50 extra cash flow, because your cost of the property stayed the same. Your insurance might go up a little bit. Your taxes go up a little bit, but it's not that significant.
Right. Well, and there's the few factors in a rent house. You got maintenance expense, you got taxes, insurance, you got rent and appreciation. All of those things go up, right?
Yeah.
But appreciation is a huge number. Rent is a medium-sized number, and all the rest are little bitty numbers. So holding on to property long term is almost always a good idea. The big numbers go up and the little numbers go up, but all the big numbers are in your favor.
Sorry, Adam, did you have a question?
Yeah, sorry about that.
Yeah, Rich, so you've been doing this for how long in the rental space?
Oh, let's see, about 25 years.
25 years. When you're doing something so long, it can be hard sometimes to change what you've done. Has there been anything that you would call a big shift in your approach in the last couple of years?
I would say the biggest shift is we tried not to sell houses as much as we used to, and that's a luxury as well, right? In your younger years, depending on what your income is and what you need it to be, you may need to sell houses to live, right? If you have a day job, my thought is, if you have a day job, buy everything that you can buy and hold it all. Sometimes we'll buy a high dollar house that doesn't fit the rental market, but we got a good deal, so that's supposed to be sold, right? But I can't tell you how many houses. I sold probably 15 houses in Willow Bend in the 250 range, many years ago, and there's $600,000, $700,000 neighborhood today, right?
Yep.
So you look back and you just shake your head. I sold 150 or 200 houses in the southeast side of Houston for 30 grand, 40 grand, 50 grand. They're 200 plus. I think the shift is to keep everything we can. You're very rarely sorry for the one you kept, but you're almost always sorry for the ones you sold.
Well, but if you didn't sell some of them, you may not be in business today, right?
Well, yeah, you got to pay the bills, right?
Right.
You got to sell some. But, when you're young and you think you need a new Tahoe, so you sell more houses than you should so you can ride high. Sometimes when you're a little younger, you ought to live a little bit more frugally. So when you're my age, you could be doing nothing instead of still working, right?
Agree. And speaking of Willow Bend, I remember, because I have a property there, and I remember I was trying to sell it for $300,000. That thing won't move,
Yeah.
And I rehab, and now it's being rented as a short-term model. And I mean, it's probably worth over 600 today. It's just seeing all
There
the,
you go.
everything that's on sale over there. So I'm holding on to it.
We had to hold a couple after the latest flood,
Yeah.
that were high dollar houses that we had on the market for sale and they didn't sell. And so we rented them and we were negative cash flowing a lot, but they went from being worth 300 or 400 to 6 or 7 now because they were worth, say, 6. And then during the flood, everybody rehabbed a bunch of houses like Fleetwood. One was in Fleetwood. They normally have 2 or 3 houses on the market over there. They had 30 on the market.
Yeah.
So we couldn't sell it. So we just held it for a couple of years. And now they've pretty much forgotten the flood over there. So we're going to sell it now because it's not going to remotely cash flow. I don't know. Can I do an Airbnb in Fleetwood?
I think we have to check, but I know you can do it in Willow Bend for sure if you have any.
Yeah.
And that area does really well. We do really well.
I have one off of South Post Oak. That's pretty good.
Okay, well, let's talk after the show.
There you go.
Listen to that. See, we just got a deal done on the show live.
There you go. That's exciting. But for people who started before the crash and stayed in real estate investing, those are people who are survivors. They handle anything that comes and they figure it out, because most people left real estate investing when it was really difficult. So when I see people and talk to people who survived it, I just appreciate that there was some kind of a skill involved where people learned how to navigate and respond. And so I give you credit for sticking with it.
Yeah, we were pretty experienced by then. 08, we were 10, 11 years in. So we were really good at dealing with lenders. We're really good at dealing, getting creative with deals. I think the biggest problem people had is, I call them newbie investor, right? Somebody that's done 1 or 2 deals. They just didn't have the ability to pivot and figure out a different way to go. And, they looked at it as, well, this is a flip house, so all I can do is flip it, and now I can't flip it. So they throw their hands in the air and leave, right? Well, what we did was said, well, what are we going to do? Well, all these will make into rentals. All these will sell on owner financing. And we talked to our banks and said, hey, we're still here. We're not going anywhere. We're broke, but we'll pay you tomorrow. Not today. We'll pay you tomorrow. But the thing happened that was interesting is we were not current with all of our banks all the time. But every time they call, we answer the phone, told them what we were going to do and did it. And they're making us new loans today.
Right. And you had made a comment earlier that I think is important for people who are investors who are new at this time. You can tell me if you agree with it or not, but you were talking about the price point of homes and the fact that you had different exit strategies, and those $600,000, $700,000, $800,000 homes, they really don't have a lot of exit strategies.
Right.
But that $200,000, $300,000 home, just like in the case of mine, it was one where I was hoping to flip it. There's too much repairs in the belly of the beast and all that. So the costs were too high. And you can convert those to rentals or Airbnb so much easier. And so if you're someone who's new, rather than trying to get rich with the really big numbered house, maybe you just start off with the one where you're learning the cycle of the whole business and you try and flip it. And if it doesn't work, you can still easily cash flow or hold it for the appreciation. Do you agree with that or no?
Absolutely. I totally agree with that. And, and I've said this 500 times over the last 25 years to somebody that asked, on your first few deals, you've never done a flip before, you don't know construction, get a couple of deals that are paint and carpet. Don't go get something you got to ripping out walls and dealing with rewire and replumbing and all that. Do an easy one where there's a lot less on a slab, no foundation problems. You get into a house, we're selling a rental property that's on blocks built in the late 1900s over in Edo, because it's just never gonna not be a money pit unless we completely rebuild it. And right now the numbers aren't high enough to rebuild it. So we can get a really high number from somebody who's willing to do that and barely make any money, I guess. So we're just going to go ahead and sell it. There's times when you need to sell. I don't like to keep the older, 40s built homes on blocks. I just don't like to keep them because they're a constant money pit. I have a friend that does a lot of Airbnbs, and the first thing they do, they rip out all the plumbing, they rip out all the wiring, because if it's an old house, and they go with brand new Romex, brand new PEX, brand new HVAC, everything brand new, because the investment up front may not be 100% necessary, but the lack of problems for their guests is worth it. And if they call at 2:00 in the morning because the AC goes out, because it's a 15-year-old AC that was working fine, but it's not going to work forever, plus it's more efficient, so there's a lot of different things to think about based on what you do with the property.
Yeah, and I think to your point, new people, if they stuck and don't know what to do, there's so much resources out there, so many people,
Absolutely.
but just got to make sure you reach out to the right people and get the right advice because, there are
Well,
people who've done 1 or 2 deals and talk a lot.
yeah, that is true. But I will say that in Houston, we have more sharing among investors than any market in the country. I really believe that people are willing to share. We have a lot of events you can go to. And, Eddie, for instance, if somebody asks Eddie, what do you think about this? He'll spend the time to tell them. Somebody asks me something, I spend the time to tell them because I want everybody to win, right? It is creating competition in a way, but everybody's got to make a living, and everyone in the real estate industry around here, it seems like, wants to help each other. That's something I like about Houston.
One of the things that I find so fascinating about real estate investing is it's almost like politics with politicians, where sometimes you're on opposite sides of the aisle and other times you're on the same side. And so there'll be some deals where you're competing with somebody for a house, and then on another one, you're partnering with them. And it's very, very fluid, isn't it? And so you building relationships with people, it's got so much long-term value, even if on that particular one, it's not going to work. Because later on, you can end up being, you may have tried to buy a house and someone else got it, but now all of a sudden they bought it. Now they need a property manager.
Well, I've bumped into people, many years ago where I was the buyer for the Homevestors franchise. I would bump into somebody I knew at the house. So we would kind of not acknowledge each other in front of the homeowner. And then we'd call and go, all right, whose turn is it? And one person would lowball so they wouldn't get it and help the other one get it. So we don't get in a bidding war, I bid 20,000, the other guy bid 8. And then I'd get it. So, but the next deal around, if we bumped into each other, I was one that was required to lowball, and it was a handshake deal. But why would you sit there and bid against each other? So a lot of guys are cordial enough to do things like that.
Okay, so as we wrapping up here, what is something that people might be surprised to learn about you?
Oh no. Well, I'm a grandfather.
Okay.
I have 2 grandsons. I'm pretty old. Well, I talked about it at the beginning, but I did fly planes in the Navy and went to like 20 countries and fought. I didn't fight in a war. I was in a war technically, but I didn't shoot at anybody, luckily, but spent a lot of time in the Gulf and overseas.
So put things in perspective for me. The plane that you flew, does it look like one that was flew in Top Gun, or is it a bigger plane?
It's about the size of a Southwest Airlines plane.
Okay.
It's about 150,000 pounds, 4 engines, 2 on each wing. Do you know what a C-130 is?
I've flown in a C-130.
Same.
It's got a lot of leg room.
Yep, a lot of room. So it was the same size as a C-130, same motors, similar size, but we were specifically tasked for anti-submarine warfare. So we could listen to submarines underwater, track them, and all that. So it was interesting times. Yeah.
Well, I'm learning. I'm going to sign up for a flying lesson next year.
I think you should.
I'm going to. I've been delaying it for so long.
Yeah. Well, fuel's still going up, so just wait till next year. It'll be even higher.
Oh my God! I need to sign up right now this year.
Right. Yeah. You have to hurry up before the sale ends, Steve.
That's right. Flash sale. So, last questions. How does the audience get in touch with you?
Well, we're at renterswarehouse.com. Just tell them you're in Houston, or sometimes the browser will realize you're in Houston and just send you. Or if you Google Renters Warehouse Houston, it'll pop up over the side on the map, and you can click on website. Or we're at 713-224-RENT, 713-224-7368, but you can spell out rent. Or I'm Rich at renterswarehouse.com.
Thank you for watching the Real Estate Baller Show. If you find value in this show, give us some support. Hit that like and subscribe button now. Help us get the words out by giving us a shout out on social media using the hashtag REBallers. Or share this episode with a friend. And lastly, leave us a comment below. Let us know. We want to hear from you as well. Thank you and see you next time.